Hello, everyone. Matt Clark, research analyst for Money Markets here with your latest Bull and the Bear podcast. Remember, if you have any comments, questions, or maybe a stock you'd like us to take a look at, just email us at thebullandthebear@moneyandmarkets.com. Now I want to get into today's podcast. I recently gave you my thoughts on electric vehicle giant Tesla, and you can check out that video on our YouTube page. But it got me to thinking about other players in the self-driving electric vehicle market. Now, you see that sector of the stock market has actually been on fire since March of 2020, and even beyond that. It's climbed about 131% off its March lows, and I'm talking about the iShares self-driving EV and tech ETF, which trades on the New York Stock Exchange under IDRV. It's an exchange-traded fund that tracks some of the biggest players in the EV market, and it did suffer a bit of a dip, but actually rose 23% in November. So today I want to talk about two other companies that you may have seen making headlines recently and tell you what I think about them and whether I think they're ones for your portfolio, and kind of compare the two. And I guess if I had to pick one of the two or neither of them, then I'll tell you which one I would go with. The first one designs and manufactures battery electric and hydrogen electric vehicles. It's Nikola Corporation, trades on the NASDAQ under NKLA. It's a Phoenix-based company that's made headlines by unveiling electric-based trucks and 18-wheelers, or at least prototypes or drawings of it. It's important to note here the company hasn't actually sold anything yet, and the news is not really pointing that in a positive direction anytime soon. On Tuesday, the company suffered a massive sell-off after its lockup period for company insiders and investors expired. By mid-afternoon on Tuesday, more than 60 million of the 166 million freed-up shares of the company had been traded. The result was a 14% drop in Nikola's share price. The company also made headlines when its founder, Trevor Milton, resigned in September amid a probe by the Security and Exchange Commission and the U.S. Justice Department over allegations of fraud. The stock price drop on Tuesday just precipitated what happened the day before when the stock price fell 27% on Monday after the company announced a really scaled-back agreement with General Motors. GM essentially gave up its equity stake in the company, and they also halted plans to produce Nikola's first electric vehicle to come to market, called the Badger, which is a pickup truck. So basically, any hopes that Nikola had of releasing the Badger have kind of been pushed way down now that GM has kind of backed out and really limited its partnership with the company. Now, since hitting a high of near $80 during the summer, Nikola has plummeted more than 78% to date. That's a pretty big drop. Since November 24th, the stock has dropped 50%. And it's not really been a good run for the company. Now, if I look at chief investment strategist Adam O'Dell's six-factor green zone ranking system, the news doesn't really get any better for Nikola. The company ranks a 1 overall, and that means 99% of all other stocks are actually rated better. Nikola ranks in the red in all 6 factors. It ranks a 1 on volatility. It ranks a 3 on growth. It ranks a 9 on momentum. It ranks a 12 on quality. It ranks an 18 on size and an 18 on value. Now, using this, we would classify Nikola as a high-risk stock that we expect to significantly underperform the market over the next 12 months. And it's one that I would probably recommend either staying away from completely or even shorting it to capitalize on potential negative price returns. Now, the other company I want to talk about is one that manufactures and sells electric vehicles in China, Hong Kong, the US, the UK, and in Germany. Unlike Nikola, NIO Incorporated, which trades on the New York Stock Exchange under NIO, has actually registered sales to the tune of $1.7 billion in the last 12 months. Now, despite the strong sales figure, the company actually has trailing 12-month income of negative $1 billion. So it's making money, but it's also bleeding money about as fast in terms of research, production, and development. On Tuesday, though, the company did report a 109% jump in its sales for the month of November. It's also developing plans to speed up its production process in China, hence where the $1 billion in negative income is coming in. They're implementing these new processes. Those new processes cost money. It's eating into their sales. Now, additionally, the stock received a big upgrade from Goldman Sachs, who said they really underestimated the company and its performance. The big reason for Goldman Sachs' upgrade was due to NIO expanding its offerings to include a battery as a service to households in China. It basically means that people who buy a NIO can now swap their depleted batteries for a fully charged within about 10 minutes, and they're really broadening where these stations are. Right now, they're kind of focused on the larger cities of like Nanking, Shanghai, places like that. They're really wanting to expand that footprint out broader to the more rural areas of China. And Since hitting a low of around $2 a share back in March of 2020, NIO stock has actually jumped 2,226% to reach a 52-week high at the end of November. However, the stock has kind of pared back a little bit, falling about 18% since hitting that high a few weeks ago. Despite the recent drop, though, NIO is still outperforming the rest of the consumer cyclical sector by a wide margin. As you can see, 67% gains for consumer cyclicals and about 2,000% gain for NIO. Now, if we look at NIO through the lens of Adam's six-factor green zone ranking system, we see a similar picture to that of Nikola. The stock ranks a 7 overall, and that means 93% of all of the stocks actually rank better. However, NIO does earn better marks on momentum where it ranks a 66. Its volatility is also much better. It ranks a 50 on that metric. This is another stock that under normal circumstances we would probably stay away from or even consider shorting. But putting NIO and Nikola against each other and choosing one or the other, I certainly like NIO better. For one, the company actually has registered sales. This is kind of a big deal. Registered sales are important because it means you have income coming in. Nikola is just spending money. They're not actually making any. They're working on trying to get partnerships like GM to kind of offset what they're spending, but it's not happening to the expediency that Nikola is looking for. So, and on top of that, the focus of NIO is on the Chinese market, which is really ripe for electric vehicles. Environmental problems in the country have people scrambling to reduce carbon emissions from vehicles, and NIO is really one of the market leaders there in China. And that's starting to expand worldwide in the US, the UK, Germany, and even into Hong Kong. NIO stock may have dropped recently, but its overall momentum is much better than that of Nikola's, which has shown very little to no upside of late. The bottom line is that the electric self-driving vehicle market is trying to gain a foothold around the world. It may not happen for a few more years, but comparing NIO to Nikola, NIO seems in a much better position to be an industry leader and in a much better position to provide potential gains for your portfolio. So if you're going to invest in one of the two, I would suggest NIO over Nikola, just because Nikola, I'm just really struggling to find any significant upside, and its momentum just is not there. In fact, it's quite the opposite. That's all for me for today. I do want to remind you that Adam's Millionaire Masterclass has launched. It launched a couple weeks ago. And in it, he explains his trading strategy that leans really heavily on the principle of buy high, sell higher. It's a strategy that he actually used to retire at the age of 33. Now, I'm not 33. I'm a little bit older than that. And I wish I would have known that. It would have made my portfolio look a lot better than it does now. You really don't want to miss it, but I've got a way for you to get to it and check it out. Head over to theinvestingsecret.com, and you can find out more about this amazing strategy and how Adam used it before and how we use it today. Make sure you check out our YouTube channel. Just head over to youtube.com and make sure you search Money in Markets. We've got the green bull and bear logo. Click subscribe, and then that notification bell, just hit that, and you get notified each and every time we put out a new video. If you want to listen to the Bull and the Bear, you can do that on your favorite podcast syndicator as well. We're on Apple Podcasts, Google Podcasts, Spotify, Amazon, iHeartRadio, and tons others. Make sure you subscribe and get alerted every time a new podcast is released. Leave us a review or comment as well, both either on YouTube or on our podcast channel pages, and we would love to see your feedback. If you have any questions about a particular stock or sector you'd like us to take a look at or anything like that, email us at thebullandthebear@moneyandmarkets.com. Also, one last thing. I want to make sure that you guys head over to moneyandmarkets.com. This is our flagship. This is where we post safe and sound, profitable information for you each and every day. And what we do is we provide a free daily e-letter for you. In that, we give you the day's stories, whether they be things on retirement, cannabis, things on Michael Carr has his chart of the day. Charles Sizemore is there to give you value investing propositions. I discuss cannabis stocks. Adam O'Dell is on there describing his system and stocks that play into that system. And really what it's meant to do is just give you a free way to get safe and profitable information for your portfolio. But you go to moneymarkets.com and just make sure you just put in your email address and you get that e-letter for free. It comes out every morning, Monday through Sunday. We do it every day because we want to make sure we're providing you the most up-to-date information that you possibly could use for your portfolio. So head over there and give us your email address, and we would love to send you that and get you on our list so that you can start getting that email for free. Coming up on Friday, Money Markets contributor Charles Sizemore is going to join me. We're going to dive into a couple stocks, tell you whether they're ones to buy, whether they're ones you should stay away from. Also, our marijuana market update will be coming out this week as well, and our week ahead coming up on the weekend. Until then, this is Money and Markets research analyst and host of the Bull and the Bear podcast, Matt Clark, wishing you all safe trading.